In recent months, there's been a lot of noise about tariffs, trade wars, and talk of an incoming recession. But what if all of that is just scratching the surface? What if the real story lies in the uncertainty that's quietly gripping global markets and freezing big business decisions? That's exactly what today's video is about. We're diving into a powerful breakdown from renowned economist Richard Wolff, who pulls no punches in exposing the deeper issues beneath the headlines. From the unpredictability of tariff policies to the hesitation of global corporations, Wolff explains how the ripple effects are hitting harder than most people realize. This isn't just theory, it's a sharp, clear-eyed look at how policy choices are influencing everything from investment flows to job security, and yes, even the looming threat of another recession. You're about to see how something as simple as a tariff can trigger a chain reaction that impacts the entire economy. So before we unpack all of that, let's zoom in on 4 crucial points from Wolff's commentary, because they reveal a pattern that you can't afford to ignore.
Tariff is a tax. It is a tax that a country puts on goods and services that are produced outside the country, but that come into the country where they are finally sold and consumed by whoever buys them. So what you're doing is applying a tax when an externally produced good or service crosses your border into your country. Tariffs are hundreds and hundreds of years old. There's nothing new, there's nothing original, there's nothing exceptional about a country applying tariffs. Therefore, there's an immense literature in every decent library full of books and articles that explain how tariffs work, what their goals are, and a good literature examining when they did and when they didn't achieve the goals that were set for them. So we know all of that. And here's the simple conclusion of all that literature, which I, as a professor of economics all my life, have had to teach to generations of students. Number one, you don't know when you impose a tariff what its results will be. You know, it's a little bit like raising an interest rate or changing the value of your currency or any other kind of important economic change. It can go this way or it can go that way, and it depends on the context and the other things going on, what the effect of a tariff or any of these other things will be. So when you hear either Mr. Trump or any of his economic advisors telling you we're putting on a tariff because it's going to have this particular result, my politest way of responding is you'd be better off talking to somebody else, because this is a person who is telling you something they cannot know. Okay, now let's be concrete about what is going on in the U.S. right now. Mr. Trump, in order to look like he's the big, powerful leader who's going to bring us, just like your clip said, riches beyond imagination, and all the rest of that kind of talk, he is levying tariffs on our neighbors to the north and south, Mexico and Canada, on our European, I was about to say allies, but that's not so clear anymore, and on all the dirty 15 and all the rest that are being talked about. And that's going to mean that if you buy something from Canada or Mexico or Europe or any of the others that have a tariff, you're going to have to pay more money. You're going to have to buy the object and pay whatever it costs, plus the tariff, which is a tax imposed by the United States on these goods and services coming in, which will be charged to you, the buyer, and that money you pay will go to Uncle Sam. So, for example, you'll have to pay $20,000 for a motor scooter made in Italy, say, and if it's got a tariff, an additional, I don't know, $1,000, $5,000, depends how high they set the tariff, that'll go to Uncle Sam. So you'll be out more money. Now, let's take a look at that. Right there, before we take another step, here's the logic. A tariff will raise the prices of the goods that are affected by the tariff. If we're not going to bring in avocados from Mexico, because that's where most of them come from, without a tariff now, if we're going to put a tariff on them, that's the threat. Well, then your avocado, however you eat it, is going to cost you more. Long story short, it's going to worsen the inflation. Wow, that's serious. Do we know in advance that that's going to happen? No, it could be offset by something else. If, for example, the cost of oil and gas were to collapse and we were to suddenly go back to $2 a gallon to fill our car at the same time that we impose tariffs, then the one would offset the other and there might not be an inflation. Is that possible? Yeah. Is it likely that oil and gas prices are going to collapse? No. Which means it's probably going to be inflationary. And I could go on and on and on. But there is something about the tariff program of Mr. Trump where we can know in advance what the result is. Here's the one example. If you impose a tariff, but you leave the impression on people that the tariff might not last that long, that the tariff might be raised or lowered in the near or even medium future, then you are doing something very dangerous. Why am I telling you this? Because Mr. Trump has been doing that. He's imposed a tariff, then he's taken it away. He's imposed a large one. Then he said he's going to do it instead a small one. It's not clear if they're going to last for a few months or a few years or indefinitely. That is important for the simple following reason. Every large corporation that either does business abroad, which is most large American corporations do that, or even if it doesn't, but it depends on buying things from abroad or selling things from abroad and so on, they have to calculate, should we invest, for example, if we're doing well in a new factory? If you're doing well, hopefully, this is the kind of question your executives face. But now with Mr. Trump, here's what's happening. They're not investing because they can't decide where. Two of the largest Japanese companies that make automobiles, I won't mention their names, but you all know them, have just informed the Mexican government that the plans they had told them they were going to build more Japanese automobile factories in Mexico. There already are a bunch. Almost every automobile company does something in Mexico, but they just announced they're not making the investment for the time being. They may in the future, but they're holding back. Why? Because they know it makes no sense for them to invest in a car company in Mexico on the hope that they could sell those cars in the United States without paying a tariff, because there isn't one now, and there hasn't been one between the United States and Mexico for many years. Now they don't know. They don't know where to put it. Maybe they should build it in Texas. Maybe they should build it in a third country. Maybe they should stay home in Japan, build it there. Here's what's happened. Many companies have already announced very clearly, because they have no reason to hide it, that because of the uncertainty within which the whole tariff conversation is discussed, they're holding back. And the way capitalism works, if the corporate sector holds back investment, means it's not hiring the workers it might otherwise have hired. It's not buying the goods and services it would have had to buy if it had made the investment. And so suddenly the demand for people, the demand for goods and services falls down, and we get what's called a recession. That's why you hear all the talk of recession now. The fault and the blame goes first to the corporate executives who make the decision to invest or not, here or there. You know, we are all, let's remember, we are all held hostage. If you live in a capitalist system, we are all held hostage for our jobs, our incomes, and everything else by the decision of the tiny minority of top executives who make all the investment choices that we have to live with. And what Mr. Trump, his fault is that he's making life so uncertain for them, forget about us, for them, that they are reacting in the...
All right, let's start with something that sounds simple, but carries massive economic weight: tariffs. Now, in the clip you just watched, Richard Wolff breaks down what a tariff really is. And honestly, it's refreshing, because we hear the word tossed around in political debates like it's some brand new invention. But as Wolff points out, tariffs are nothing new. They've been around for hundreds of years. Countries have always used them to protect their industries or punish trade partners. Basic stuff, right? But here's where it gets interesting. Wolff says, and this is important, that you can't predict exactly what a tariff will do. Sure, the goal might be to boost domestic manufacturing or create jobs, but in reality, it's a gamble. The outcome depends on a ton of other moving parts: global supply chains, local prices, consumer habits, and even political reactions from other countries. So when you hear a politician, like Trump, for example, promise that a tariff is going to magically fix the economy or bring back American jobs, Wolff's advice is pretty clear: be skeptical. Because that's just not how economics works. You can't throw a tax into the system and know for sure what it'll do. And honestly, that uncertainty sets the stage for everything that comes next. So, right after explaining how unpredictable tariffs are, Richard Wolff dives into something even more unsettling: how this unpredictability affects big business decisions. Now think about it. If you're running a major global company and the rules of the game keep changing every few weeks, what do? You hit pause. You don't build that new factory. You don't hire thousands of workers. You don't start shipping parts across the border if you're not sure whether there's going to be a 25% tax slapped on them next month. And that's exactly what Wolff highlights here. He gives a real-world example. 2 major Japanese automakers were about to invest more in Mexican factories. But the moment Trump started playing musical chairs with tariffs, they backed off. Not because they're scared of tariffs per se, but because they can't plan long-term if the policy might flip-flop tomorrow. And here's the kicker. This hesitation isn't just about companies being cautious. It has ripple effects. When they don't invest, they don't hire. When they don't hire, people don't spend. And that slowdown spreads like wildfire. Wolff is basically saying, this isn't just theory, it's already happening. And if you zoom out, you realize how fragile the whole system is when a handful of unpredictable decisions can stall an entire sector. It's like the economy's a car, and someone's slamming the brakes every 5 seconds. How far do you think we're going to get? All right, now here's where Richard Wolff pulls the curtain back even further, and this part honestly hits like a gut punch. He says, we're all held hostage. And you know what? He's not wrong. In a capitalist system, regular people, you, me, entire communities, are all at the mercy of decisions made by a very small group of top executives. These are the folks who decide whether to invest, expand, or just sit tight. And when they freeze, the whole economy starts to feel it. Wolff's point here is crystal clear. The system isn't broken because it's doing this. It's designed this way. The logic goes like this. If investment dries up, whether it's a new factory, a new tech hub, or a regional distribution center, then jobs disappear before they're even created. People don't get hired. Suppliers don't get orders. Local businesses don't see that spillover spending. And the chain keeps going. This is wild when you think about it. Everyday people are working hard, trying to build something stable, but it all hangs on whether a handful of CEOs feel secure enough to make a move. And when folks like Trump inject chaos into the system, one day it's a tariff, the next day it's gone, those executives just freeze up. So instead of economic growth, we get economic limbo. And regular people pay the price. Wolff isn't just giving us a warning here, he's handing us a reality check. Now, here's where Richard Wolff brings it all together, and honestly, it's sobering. In point 4, he talks about how all this uncertainty, these on-again, off-again tariffs, shifting trade policies, and mixed signals from leadership, creates a perfect storm for recession. And let's be clear, he's not being dramatic. He's laying out the mechanics of how this stuff works. When investors and businesses don't know what the rules will be tomorrow, they don't invest today. And when investment slows down, everything else follows: jobs, spending, even innovation. It's like the entire engine of the economy starts sputtering. Wolff warns that this kind of policy chaos doesn't just delay growth. It pulls the plug on it. And here's the scary part. He's not saying a crash might happen. He's saying it's likely, and the conditions are already in place. The only thing we don't know is when. So what do we do with all this? Richard Wolff's commentary isn't just some academic rant. It's a wake-up call. He's telling us to look beyond the surface headlines, beyond the slogans and sound bites, and pay attention to the patterns. Because if history tells us anything, it's that the economic cost of instability doesn't hit the boardroom first. It hits the people. And that's why this conversation matters. Backhand index pointing down medium skin tone. Now I want to hear from you. Do you agree with Wolff's breakdown? Have you seen any signs of this uncertainty affecting your own work or community? And what do you think leaders should be doing differently? Drop your thoughts in the comments below. Let's unpack this together. If you found this breakdown useful, don't forget to like, subscribe, and hit the bell so you don't miss what's coming next. We've got more deep dives lined up.